Give us a sense of where the bond market is right now that we've heard once again from the Fed.
The bond market is clearly in transition. And yesterday's Fed meeting, I think, made that transition a relatively smooth one. But the path of least resistance from now on is for interest rates to move higher.
So, Kathleen, I have a chart here that I wanted to share with you that shows what the market is now thinking about when it comes to rates moving higher. If you come inside the Bloomberg here, the white line basically represents what the market's looking at for 2019. The white line is 2018. So we're looking at 64 basis point hikes this year. That's like 2 and change, which really only leaves us with 30 more next year, which is 1 and change. What's it going to take for the markets to start to re-rate?
The market's starting to move, but you bring up a really good point that it's not looking too far out in the future. And when you think about what's going on, unemployment is at all-time lows for where we are, and we just had a big tax cut. That's going to take some time to work its way into the system. And when it does, I think we'll get a better chance of how strong the pickup in demand could be. It's an interesting time to be raising rates and loosening the fiscal spigot. We could be seeing many more hikes down the road.
So, Kathleen, where are the opportunities right now for a bond investor, somebody who wants to invest in bond or credit? Where are their opportunities? Where are things priced attractively?
That is a really good question because the fundamental backdrop is clearly pretty positive. That's why the Fed is starting to tighten and is saying that there's further to go. Normally, when the economy is going well, you look to take additional risk in credit for a higher return. Investment grade and high yield bonds, the spreads there relative to treasuries are pretty tight. I actually think that the best opportunities are in looking away from the U.S., either in local sovereign debt or in dollar-pay corporates in emerging markets, particularly Latin America.